Well, hello there. So this session, I started to realize that we need some change. So I came to this beautiful place, this beautiful cafe. This session is about the Fibonacci level retrieve. So what is it all about and how it can serve us? Actually, it is not an indicator, it's a tool. But I decided to talk about it right after the indicators. So we can combine them with each other, which I'm going to do by the end of this video, so don't go anywhere. Stay here. If you have any questions, again, feel free to ask me down in the comments.
I've got some exciting news for you. Bybit, the crypto exchange everyone's talking about. Imagine earning up to 30,000 USD in deposit rewards, enjoying zero maker fees for the first 30 days, and trading with the lowest present fees in the market. Yes, it's all possible. And guess what? Bybit is among the top 3 global crypto exchanges. So why wait? Click the link below and dive into the action. Trust me, every trader needs to be on Bybit. Don't miss out. Let's make those trades count together.
Let's waste no more time. Go to the chart and let's see what.
Well, the first part is the Fibonacci sequence. Before we delve into the Fibonacci retracement levels, let's first talk about the Fibonacci sequence. The Fibonacci sequence is a series of numbers where each number is the sum of the 2 preceding numbers, starting from 0 and 1. So the sequence goes 0, 1, 1, 2, 3, 5, 8, 13, 21, and so on. This sequence is named after Leonardo Fibonacci, an Italian mathematician who introduced the sequence to the Western world in his book, Liber Abaci, in 12th century. Now let's talk about the Fibonacci retracement levels. The Fibonacci retracement levels are a set of horizontal lines that indicate areas of support or resistance at the key Fibonacci levels before the price continues in the original direction. The Fibonacci retracement levels are calculated by taking the high and the low of a price move and diving in the vertical distance by the key Fibonacci ratios of 23.6%, 38.2%, 50%, 61.8%, and 100%. These ratios are derived from the Fibonacci sequence. Now that we understand what Fibonacci retracement levels are, let's talk about how we can use them in trading. The Fibonacci retracement levels are used to identify potential support and resistance levels, where the price may reverse or continue its trend. The 23.6% and 38.2% levels are considered shallow retracements and are often used to confirm the trend is still intact, while the 50% and 61.8% levels are considered deeper retracements and are often used as potential entry or exit points. It is important to note that Fibonacci retracement levels should never be used as the sole basis for making a trade decision. They should always be used in conjunction with other technical analysis tools and fundamental analysis to confirm a potential trade setup. Now let's go to the chart and see some examples and setups. Well, this is our chart once again. Previously, I talked about different trading indicators, technical analysis indicators, but this time the tool that we want to find is not within the indicator section because it's not an indicator, it's a tool. And it's Fibonacci, as I told you. You can find it from this tab over here. And we want this one, Fibonacci retracement. You can make it favorite and it pops up here. And how it works. You know, there are tons of things, tons of books, articles, tons of videos out there you can find. And everyone is teaching something new and different. How to work with it, how to trade with it. Although I told you in the general idea and overlook of the Fibonacci retracement levels that we can use it for both entry and exit points. But how do I use it? And that's what I want to tell you. If you haven't checked my previous videos about support and resistance levels and technical indicators, especially RSI and moving averages, you have to check them out too, because now I want to come up with a really good trading strategy and how to use Fibonacci retracement levels. But first, before getting into it and see how it's get done, let's first, because it is really important how you draw it, how you draw your Fibonacci retracement level. So if you imagine that we are looking at this particular area in this trading range, beautiful trading range here on Ethereum, ETH, USDT, 5 minutes time frame, how to draw Fibonacci retracement levels is really easy. I've seen lots of videos. Even when I go back, I check my previous days, early days, starting the trading, and I was watching this course, and the teacher, the tutor, he was making it so difficult. And after a while, when I got into it, more into it, and I started to study some books, articles, watch some videos, courses, I understood it was way more easier than he told us. So it's really easy. You just pick the tool from here. And of course, there are some settings, which I'm going to talk about later on. This is my own kind of setting. You can use the default setting. You can come up with your own setting and see, or you can check other videos. This is what I use, and I came up with after like thousands of trades and lots of articles, etc. These are the things which I really need and I really use. The rest of the data is not that much necessary. How to draw them? In this case, let's imagine that we want the price to move down to here, and we want to know, we cannot see this part of the market. Let's imagine that this part of the market haven't happened yet. So let me do it like this, and we are here. How we can draw it? We want to have a futuristic look, have an overlook of the near future, and get to know how much the price will go up and set our target points. It is really simple. We should find the highest point and the lowest point. We must consider the shadows, the wicks too. So I put it from here to here. Then we can extend it. As you can see, price beautifully had reactions to these areas, beautifully. And it works like support and resistance levels. And as I told you before, these are the levels: 38, 50, 61, and 1, or let's say 100. So we can set target points here. But how do I use it? It is really simple. I just combine it with the other data that I have from before. How to draw support and resistance levels. You have to watch my previous videos, which I'm going to leave the link both down in the description and above here. But just now I want to draw it. So this is the resistance level. Let me extend it. Resistance level. Change the color to red. And down here we have our support level. And I'm going to change the color to green, as like always. And then I want to add two indicators to the chart. I want one EMA and I want RSI. Let me, just like before, change everything that I want. So I go to RSI setting, remove the middle band. So it's a good practice after a while, after some couple of videos. Remove everything about the middle band. We don't need it. I just customize it the way I want. You can customize it whatever the way you want. I do not touch anything else here. In the input section, that suffices. Then I go to the settings of the EMA. I put it on 20. I make it a little bit more visible by making it more bold and change the color to black, just like that. So let's say the price went down to here and I want to enter a trade somewhere around here, this area. So where is the best place to enter? For interest, I do not use Fibonacci level retracements. I do not. This is my choice. You can choose your own way. If you are new to trading, okay, you can follow whatever I tell you, because it works out. It works out for me perfectly. But if you're already into trading, and you're here to solve some issues, you can come up with your own strategy. But this is what I use. So I just wait to see a divergence like here. So the price had a lower low here, but I have a divergence in RSI. So let me make it more visible like this. I have a lower low in the price, but I have a higher low in the RSI, and it's on a key level. It's on the support area. Then what else I must look for? I must look for more confirmation. So I can see one beautiful engulfing. Let me zoom in. I see beautiful engulfing here, but I do not enter the trade yet, because due to the EMA line and EMA rule, which I told you previously, watch those videos. There's a mandatory to be watched for you, especially as a beginner. I do not enter the trade right away because the price is still below the EMA. So it means the market has not changed the direction yet. It is only a confirmation. So first confirmation, divergence. Second confirmation, okay, I had one hammer here, I have engulfing here, another hammer here. I wait for a candle close, a strong candle close, a green candle above the EMA. Let me bring the EMA to front, so it's gonna be on the candles. This one was not a so strong kind of a candle, but this one is. Then here I can enter the trade, just like that. Put my stop loss below the support level. And now it's time to bring in our Fibonacci level retracement. I just put it on this top. I draw it down to this bottom. And what I do, which I'm going to talk a lot later on in money management, risk management system, what I myself do as a trader, I set 2 target points for profits. The first target point, so I set my first target point at level of 61%, and I set my next target point at the previous high. So the previous high was here, and I put my next target point here. So one target point here. So I enter a trade like with $1,000, and I come out of the trade with 50% of my capital. I come out of it, so I take the profit of 20% with 10x leverage, for example, let's say here, and I come out another 50% up here. From here to here was like another 14%. Then later on, I'm going to talk a lot about these. These are the savings that we're going to make, and we call this kind of a step saving. But how to do them, we have to know lots of other things. But as for now, this is a way to trade, set our target points, and this is one of the ways that people use them. Later on, I will talk about pivot points. I will talk about different strategies, how to come up with them, but this is how I use them. Okay, here's with a beautiful short trade example. We just draw our levels, just like always, like this. So this is our resistance area. Let me put it to red, and then we have our support level down here. Let me change the color to green. And so we wanted to take a short trade. How we could take a short trade, and we didn't know that this will happen in the future of the market. So how could we know? So first, we are waiting for some clues in the market. So we cannot see really good divergence here. We're looking for other indications. We see that, yeah, we have shooting star here, we have engulfing here, and then we have another engulfing, beautiful engulfing here. At this candle, although it was one engulfing 3 candles before it, if you don't know how to read candlesticks, you have to watch my previous videos. Again, the links above here, check them out down in the description. And then we can enter short trade here, put our stop loss here, and where to put our target points. We know that the price will go to this level, but in order to save some of our profit, we can determine Fibonacci levels. So we put our Fibonacci level from this very bottom and this very bottom to this very top, and we can just extend it like that. Again, the setting is just like this. You can pause the video for a moment, check it out for yourself. Do it the way I do it, or change the colors, or do it either way, but this is my setting. So you can either just go with all the volume you've entered in the trade, you can just go down and exit the trade here. So it was, although it was a successful trade, but in order to save some of our profit, because maybe sometimes the price may reverse from these levels and go right up and hit our stop loss. So in order to save some profit, we can exit the trade on the level of 60%, just like the previous example, long trade example. So we can set up one target point here and the second target point down here. And as you can see, the price went even more down than that. So this was the short trade example. So you can just do it like this and practice for yourself. If you have any questions, just feel free to ask me down in the comments. This is how I use it. You shouldn't use it this way. You can try other ways. You can even find some entry points with it. It is completely up to you. But this really works well for me, and I take really good profits with it. And I came up with this idea like after, let's say, 1.5 years, 2 years of losing thousands of dollars. And then I realized, oh, it really works. Why I didn't do it from the first place? But quick disclaimer, just one sentence. Do not do it until the moment that your trading is going to be over and you're going to gain some experience. Do not attempt to take any type of trade. Not this one, not any other type of the trade. You need to know tons of things. It is not only about technical analysis. It is not only even about fundamental analysis. Technical and fundamental analysis are just less than 10% of your trading toolkit. The other 90% is the psychology of the market, money management, and risk management, which we're going to talk a lot. But these are that 10%, fortunately or unfortunately, is mandatory to know before we're getting to the 90%, the main job you're going to get done. So now we're just talking about these ideas. If you're already into trading and you're here to solve a problem, you're looking for a good setup, so here it is. Can even mix it up with other trading strategies. But if you're new to trading, you have to wait for your course to be done and be finished. And practice. Never get tired of practicing. Try this on short positions, long positions. Just feel free to ask me anything pops into your mind. I would be really happy to answer them one by one.
Still struggling with budget and you want to trade big numbers? Well, unlock your trading potential with FundedNext, the prop trading firm that truly understands your success in Paramount. Here's why joining us is a game changer. Firstly, enjoy an unparalleled 15% profit share, a testament to our commitment to rewarding our hard work and success. Unlike other prop firms, FundedNext delivers on the promise of the world's best payout bonuses. Bid farewell to the stress of tight deadlines. With FundedNext, there's no time limit on most challenges, allowing you to trade at your own pace and unleash your full potential. True trading excellence requires focus and a stress-free environment. Our unique approach to drop-down calculations sets us apart. FundedNext calculates the maximum daily drawdowns based on your account balance, ensuring a fair and reliable assessment of your trading performance. We are dedicated to being the world's most reliable prop firm, experiencing the best trading conditions in the industry with raw spreads, including in swap-free accounts and the lowest commissions, just $3 per round lot on forex pairs and commodities, and 0% per round lot on indices. Maximize your profit potentials with our competitive pricing. At FundedNext, you're not just a trader, you're part of a family. Benefit from pro support team, experienced professionals committed to assisting you every step of the way. Your success is our focus, and personalized guidance is a cornerstone of your trading journey. Choose FundedNext today, elevate your trading experience. Don't settle for anything less than the best. Join us and unlock your trading potential. FundedNext, where your success matters. Don't hesitate to click and sign up on FundedNext down in the description or above here. This link is exclusively tailored by FundedNext for Income Nomad channel subscribers, and believe me, you're gonna be surprised.
As you can see, the Fibonacci retracement levels are not even used in trading or technical analysis, but it is in the whole universe around us. Originally, starting with my face here, the laptop here, all the environment around us. So the whole universe is based on this retracement level. But you must keep it in mind, although it is a strong tool to use in order to take some trades and make before trading decisions, but cannot only trade with it, and you have to combine it with the other trading strategies or methods, tools to make some good trades. Did you like this video? If you really like it, hit the like button. By turning on the notification bell, you can just be informed whenever I'm gonna upload a new video, which I'm doing on daily basis. You're gonna be the first to be informed. And if you haven't subscribed to my channel, do it right away. You're gonna be on my friends list, and I do a lot for my friends. Believe me. And share my videos with your friends. If you're looking for a course like this. Of course, it's a free course. And that's the thing which I'm telling you are not to-do list than a to-do list, because a to-do list is just limited. You can do it as fast as possible, but a not to-do list is coming from experience, losing thousands of dollars during years, and that's the experience that I'm sharing with you guys. And I would be really happy to answer your questions and be with you until the moment that you can make your own money in the end of the day. Thank you so very much. See you in the next one.